Folks, good morning and welcome to the Contrarian Trader. This is Bob Desmond. It is July the 1st at about 7 o'clock in the morning. And I wanted to make this video due to the fact that I received an email. It's from one of my competitors. I often opt into their emails to see what they're doing. And every once in a while, they'll send out trade alerts. And this morning, I took a look at this one and I said, I don't get where he's coming from with this alert. Now, I don't want to name names because he could be the nicest guy in the world. I'm not going to bash my competition. However, I just want to point out the reasons why you might not want to trade this stock to the long side. He gave the reason of buying this stock as a flag formation, which, okay, I could see a consolidation here. I get the breakout above the $8.04 level. Where did we close yesterday? At $8.08. So you have a clear breakout. How is our volume? This is a concern. Volume dropped off. You want to see ever increasing up volume on a breakout. So my concern is that he's telling people, or he's going to tell his members, to get involved with the stock to the long side. And again, he did not issue an alert. I think he's just saying watch the stock for a possible trade to the long side. To me, it's not even a watch stock to the long side. The reason is this, is that as a swing trader, I know that the declining 50-day moving average is going to act as resistance. So what's our spread between where we closed and where the 50-day moving average is? The 50-day moving average is at $8.26 versus where we closed at $8.08. We made a high yesterday of $8.12, and then we backed off of that high. So we have already a little bit of selling coming in because you have people that bought back here who are now looking to get made whole because they survived this plummet and they're just happy to get their money back. This is called overhead supply. Now, I've said why I wouldn't buy the stock. Now I'll tell you where I would have purchased the stock. A couple of points, and it all depends upon your risk tolerances. The first point where I would have bought the stock is right here. Let's just say we're going to build a position. We want to accumulate and scale into a position. So we had a pullback to the lower band of the declining downtrend channel, and guess what? When you use multi-period charting, this is a weekly chart, you pull back and you see where a stock has found support before. And you can see that $6.68 has acted as support back in 2013 and in 2012. Well, that's great. That's great information. If somebody would have sent me out an alert back in May saying that, hey, this stock is at support, it just flashed a key reversal, you know what? I may be interested in buying that stock. That's what I do. So we pulled back, historic support, and we flashed a key reversal. So you could just scale into that position, meaning open up your position. Not all at once. You put a stop loss just below the lows of, say, $6.58. You close below that level, you get out. You take a small loss. When would you add to your position? Well, you would add on a rally to the upper band of the declining downtrend channel and a breakout. And in a market which I believe is very, very precarious right now, it's poised for a correction in the coming days. And I'll go to the chart of the Russell 2000 in a moment. I would have opened up this position on a breakout and a close above the upper band of the declining downtrend channel, and that's where I employ the 3-day rule. In a market that I believe is a toppy, I won't buy a stock like in the go-go momentum days just because it closes above resistance. I want it to sit there for 3 consecutive days. 1, 2, 3. Add to your position. You could add once again on a breakout. That's 3 consecutive buys, and you would have enjoyed this rally, this short squeeze, up to a high of $8.12, rather than looking for a breakout above $8.12, which marked the high of June the 30th, and you have very, very limited upside potential before you hit resistance. And think of all these buyers back here who are looking to get made whole. You had a fairly decent short squeeze play in the name. However, that was back here. Those shorts have since been squeezed. So what is your catalyst to the upside? Now, what adds to the risk of this trade is when you take a look at the Russell 2000. The Russell 2000 has been on a tear in recent weeks, no doubt about it. But take a look at your up volume. It's declining. Today marks the first day of the third quarter. We are at resistance. So why does that matter? It puts the markets at risk. Right now, the Dow futures are up, the S&P futures are up, And I believe that you could see some selling later in the day as institutions look to book profits into the third quarter. Remember, these institutional guys, they want to head out to the Hamptons. They don't want to do all that much trading in the summertime. You have the 4th of July weekend coming up, so you need to be very, very careful. This is how the big boys play. They're going to put computers on autopilot, and they're going to keep this market in check. So there's no time to be buying stocks at resistance, especially stocks that are in a downtrend, and indexes that are at resistance and trading higher on ever declining up volume. So folks, the lesson learned here, use, as we do with the Contrarian Trader, multi-period charting. Identify your key support levels on a weekly and monthly basis because you identify where you have support on your side. Then use your daily charts to identify your best entry points. What is your catalyst? In this case here, it was the fact that the technicals were setting up properly and the fact that you had a fairly decent short squeeze at hand. I believe that that trade has left the station and that any potential upside, and I do agree, the stock will probably head higher, but I don't think there's much further upside to be had. And as a trader like me, I like to put on large positions, concentrated positions, and I can't do that once a stock has left a station like this. The ideal time to have purchased this stock, a large position to take advantage of a short squeeze, was back here, buy point 1 on a key reversal, buy point 2 on a breakout above the upper band of the declining downtrend channel. Remember the 3-day rule, buy point 3 on a breakout above resistance, and I would be looking to book profits right now and scaling out, not scaling in. That's a sucker's bet, so please be careful. If you have any questions, leave a comment below. If you watch this on YouTube, if you're watching this on my website, enter your email address and you'll be alerted to these videos in the future. You will not be spammed. We hate spam too. If you're watching this on StockTwits, please follow me on StockTwits. Be well, folks, and have a great, great trading day. Have a profitable week. Happy 4th of July weekend to you. Bye-bye.